Welcome to TheoTrade. This is Don Kaufman. Here we are. It's February 27th, 2017, doing the Theo Night video. First and foremost, if you missed today's trading session, well, I wouldn't say you missed very much. The S&Ps had an astounding, well, $3.50 move over here on only about 1.1 million contracts. What I'm saying, ladies and gentlemen, market trade today, it was light, it was chopped out over here. I mean, taking a look at intraday trade on the S&P futures, this is what it looks like in the overnight trade. It was, relatively slow, but there's a few areas that really did kind of stand out today. First and foremost, let's cruise over, okay? No, not the Nasdaq. The Nasdaq up 5 points, which is relatively unchanged. The Russell was kind of a standout. It exploded pretty much out of the gate this morning and took off. And again, when I say take off, you're approaching, once again, all-time highs inside of the Russell product. Okay, hey, maybe you're not necessarily familiar with the Russell, but you've had some very large ranges inside of the Russell product, but neither here nor there. So the Russell takes off to the upside. Well, why? Well, look no further than the bonds selling off. Okay, so the bond product actually faded a bit today, and if you look at the bonds, they're down about 20 ticks. Now, most of the time when you think of the bonds, you think, all right, bonds are down. The next thing you think, financials are up. And they are. But the Russell is also an incredibly interest rate sensitive product over here. And the Russell kind of accentuates every move. And the Russell is a slightly more volatile product than financials. And it's much more volatile. The Russell itself is substantially more volatile than, of course, the S&Ps. Now, what really caught my attention, and again, in a rather slow day, let's just focus on, it's kind of catching our attention. So tomorrow night, which of course Tuesday evening, there happens to be what, again, it's not in effect the State of the Union address. Okay, a lot of people are talking about, hey, listen, there's, the president's going to speak, there's going to be new policies, very unsure. But in the end, and again, no two ways about this, look at the March 1st options in the SPX. So one kind of cool thing is this week, the SPX is going to have 4 expirations. There was a Monday expiration. There'll be a Tuesday expiration because it's an end of month option. So tomorrow, okay, tomorrow's Tuesday. There's only a $10.45 expected move in tomorrow's trading session. So $10.50 up, $10.50 down, and that includes tonight. So, here we are on Monday evening, and that's all of trade. And again, the SPX does open in the pre-market, but all of trade tomorrow, from all the risk there's tonight through tomorrow's close, it's about $10.50. Then you actually look at Wednesday. So the volatility for Wednesday is slightly elevated. Okay, so again, this week there's a Monday expiration, there's a Tuesday, there's a Wednesday, and there's a Friday. We have almost every day of the week covered over there. Sorry, we don't have Thursday, but there's a very slight differentiation, and we are looking at about a total of a $16 move. Now that's from right now until the close of Wednesday is about a $16 expected move. I would not expect that to back off. If anything, tomorrow, okay, tomorrow being Tuesday, you might see a little bit of a pickup in terms of volatility. Again, there's a lot of apprehension around the speech that's going to come out on Tuesday night. Probably worth watching the futures a little bit Tuesday night as well. But neither here nor there, because again, this stuff is all pretty much self-explanatory, right? You look at the volatility, you can read into that for yourself. Let me show you some areas that I don't think a lot of traders are necessarily catching. So the bonds kind of sell off over here, and I'll show you the intraday trade. The bonds kind of fade a little bit as the day progresses. Again, nothing huge, right? A half a point. But once again, the bonds are kind of butting up against some recent highs. Now, if you see this dashed line, it's a contract change. And if you're unfamiliar with that, futures contracts, you have to go what's called adjust for contract changes. Hit apply, hit OK. And the reason you want to do that is different contracts for different expirations trade at different values. So by doing adjust for contract changes, it actually tells your trading application, hey, I want to see this as a continuous contract. If you use any type of technical analysis, you got to do this. But the point that I want to make is, again, we've actually 3 different occurrences been right here at the 152 level and stopped on a dime. What I want to show you about that is the bonds do feel like they're approaching and about to break higher. And I want to see if there's going to be follow through to this, because it's a sign of risk in the marketplace when the bonds are starting to break a little bit higher. Now, again, lately the bonds have been breaking higher. You have not seen the inverse in the financials. The bonds have been trading higher and the financials are trading higher. It's, this is like the impenetrable marketplace. But let me show you something besides the bonds over here, because the bonds could be trading higher just because, hey, maybe the market's a little nervous about the presidential speech, neither here nor there. There is one interesting thing, though, that I picked up on, and it's towards today's trading session in the volatility futures. Again, today's trading session, frankly, you couldn't even watch. It was boring. And there's nothing wrong with saying that, hey, there's going to be some boring trading days out there. But take a look at the volatility futures. And you're like, okay, so I'm looking at volatility futures, and this is on an intraday basis. There was a big buyer of volatility futures in really the, roughly speaking, like the last 2 hours of trade. Don't know why. Don't know why, but the only reason you buy volatility futures is because you're a little fearful there's some risk out there. But what I thought was interesting about this, and for those of you unaware, the volatility futures, when somebody buys them, there's typically risk. And usually when they're buying volatility futures, the S&Ps are typically selling off. You didn't see the S&Ps, they were rallying with it. So again, this is Mountain Standard Time. You see 12 noon, the S&Ps were rallying. Okay, nothing huge though. They rallied about 3 points. In the exact same time frame over here, okay, and there's about 12 noon, they bid the volatility futures higher. And on top of it, I'll scroll down, okay, I also noticed the short duration volatility, which is the VXST. Okay, for the most part, there's the VIX, and now there's the VXST. The VXST is a 9-day, again, 9-day look at volatility. It's like a 9-day VIX. They bid up short duration volatility. So in some way, shape, or form, okay, there are net buyers of volatility. Just picking up on it again. It's neither here nor there just yet. We'll see how this plays out. Tomorrow, do I expect much? Everybody is, again, they're talking about it, and there's all this conjecture around this presidential speech. Nevertheless, the market itself is not pricing in any drastic amounts of risk. I even looked over at the financials. Okay, of the financials pricing risk, not really. Listen, the XLF the rest of the week is at an 18 volatility, a 40-cent move. Okay, the one thing I'll focus on is that, again, why did they buy the volatility futures into the close? Watch the S&P, okay, at tomorrow's open. Again, there could actually be some sell-side activity. There's a reason that volatility futures got bid up. There's a reason that the VXST is elevated at the close over there, and we're going to be again a little cautious coming into early trade tomorrow. Other than that, again, looking at the sectors in the S&P, it's a coin flip, right? One of the things that I'll continue to reiterate, we'll know that the market has normalized only when you look at the S&P 100, and again, that's what I have pulled up over here. Okay, here's the S&P 100. When the advancers or the decliners, okay, when you start getting readings of like 90 stocks down, maybe 10 up, then correlation is kind of normalized. And that's something that you want to really look for. We have not seen, okay, like 90 stocks up or down for that matter since the presidential election. And again, correlation is a much broader sign of markets normalizing. Thanks everybody for joining us here at TheoTrade. Have a great evening. Bye-bye.